What's up, everyone? Thanks for tuning in. I hope y'all enjoy this video series we're going to be shooting today, doing a little candid video off the cuff. I'm John Cruz. If you're new to my videos and my channel, make sure you subscribe to my YouTube channel. It's all about building your finances, getting out of debt, investing, real estate, and transitioning out of the military and into the business world, and specifically real estate. And I'm joined here with one of my buddies, Alex Deguzman. It's a funny story how we met. Alex, you have to share that later, how we actually met in person. But we've known each other for quite a while, for a couple of years now. Say what, 4 or 5 years now, man, since Italy?
Yeah, about so, yeah.
Yeah, we met in Italy, in Aviano, Italy. We were stationed there together for about, let's say, I think I was there for 4 years. Yeah, we were there stationed together for 4 years. We served as a defender there together. We got to experience all the crazy times together as an A1C and senior airman, traveling, partying, just living life up. And that was some of the best experiences of my career and time of my life, honestly. But yeah, y'all are welcome to shoot any comments down below throughout this video. If you want to learn more from Alex or myself, learn our story. What we're trying to do with this video is primarily share our stories from leaving the military and getting into real estate, and then also talk about our experiences in real estate. And specifically, Alex has been in real estate for quite a while, so he has a lot more experience that he'll be able to share with you guys. But yeah, this video is meant to share as much value as we can to you guys and provide as much information. But without further ado, Alex, if you want to introduce yourself, man, and share with everyone your story, I guess.
Great. Awesome. Well, thanks for having me, John. So a little bit about myself, guys. My name is, of course, Alex Deguzman. I'm currently a real estate agent in the Orange County area. Prior to this, I was in the Air Force for about 6 years as a security forces member. And I was actually stationed with Cruz, or John here, about 5-6 years ago is when I met him in Italy, and then known him for about, ever since. And just a quick little comment, because he wanted me to talk about how I met him, was he used to have a prior channel to this called J Cruz USAF. I don't know what it's titled now, but that was his first channel. And when I was joining the military, I was actually watching all of his videos, like what was basic training like, what was tech school like, what's being a white rope or folding my t-shirts, what is all of that like? And I would see all of his cool videos about traveling in Italy and all of that. And I'm like, wow, how cool would that be if I went there? And coincidentally, my first duty station was actually Aviano Air Base in Italy. And I bumped into him in the gym locker room. And I was like, holy shit, you're J Cruz USAF. Oh my gosh. And then we've been friends ever since. And here we are. But aside from that, fast forward to this date, I've been in real estate for about 4-ish years now. I'm going to be getting my broker's license here very soon. I actually started my real estate career after I bought my first investment property during my time in the military, and then balanced 2 careers of real estate and Air Force, and figuring out how to navigate all of that to make more of somewhat of a seamless transition from the military life to the private sector. So been doing that ever since. It was definitely a little bit of a challenge, but here we are, and I'm excited to share it all with you. So
awesome, man. Thank you for sharing your story and your experience with us, man. I remember you actually were studying for your real estate license while you were deployed in Afghanistan. Is that correct?
Yeah, that's correct. So I started the licensing courses just a little bit before departure, because I wanted to make sure that I was productive, right? Now, of course, the mission always came first when I was out there, but I wanted to make sure that I wasn't just playing games on my phone or just playing a million games of spades. So when I was in Afghanistan, that's when I did a lot of my studying, just to knock out that licensure, all of that. And it was tough. But here we are.
Yeah, manage the time that you have, and most definitely capitalize on the downtime you got now too. It was, especially when you were in Afghanistan, and like for me as well, trying to capitalize as much as I can on my downtime. I'm currently working towards my real estate license, like what you had gone through in Afghanistan. I'm going through the same school you recommended, Allied Schools, alliedschools.com. Shout out to you guys. I'll post a link below if any of you guys are interested in getting your real estate license as well. If you head over to their website, they have all of the information on there, the 3 courses they have to go through. That comes with flashcards, books, and everything. It's been a great learning experience so far. I'm still just started, so I can't really give all of the feedback I can on the program so far, but so far it's been very informational and entertaining, and it's not dry information. But I'm excited to to get into real estate as well. I'm planning on separating in June of 2021 of next year and transitioning from active duty into the reserves. And then when I enter the reserves, I plan on doing real estate full time with Alex and also doing videography within real estate to help market real estate properties, luxury properties to the perfect clientele and getting them into that house virtually and getting that foot in the door, initial step. But one of the programs too also that might be helpful for other military members that are seeking to transition out of the military, it's called the DoD SKILLBRIDGE program. If you guys are not familiar with it, I will post a link below as well. It is a federally funded program, and it allows a military member during the last 6 months of their enlistment to intern with a company of their choosing in an industry that they want to work in. And essentially you're working for free. So you'll gain the essential skill sets that you need while also still getting paid by the military. And that's something I'm trying to work with Alex right now as well with his brokerage compass by applying through the DoD SKILLBRIDGE program. And if I get approved and everything goes through, I'll be able to go and join him and intern with him and learn from him, learn the ropes from January to June of next year. And that's what I'm really hoping for. And it's a perfect opportunity because you're interning, gaining all the essential skills while you're still getting paid by the military. And I think that's one of the biggest hurdles that I think you mentioned that before, is when you're first starting out is trying to learn the ropes. And in real estate, it's all commission too, like you stated. So it's kind of a feast or famine scenario. So it's kind of scary when you're initially starting. But if you have those first 6 months, and you're still getting paid by the military and you're still able to learn the ropes, I think that's one of the best things you can take advantage of while you're in the military. So again, I'll post that link in the description below for all y'all viewing this video. But Alex, I guess, what has been your biggest hurdle in real estate when you initially transitioned out of the military into real estate? What was your first struggles? What were your struggles like? And then what are some of your success stories as well?
Yeah, great question. And so usually the biggest struggle for me when I first jumped into the industry was finding people to work with, right? You come in there with great intentions. You want to, share your real estate expertise with everybody. You want to help families. You want to be a part of that process, and you have a lot of great intentions. But the truth is that unless you're with a brokerage that, gives you free clients or your paid salary or anything like that, you're ready to jump on in, but you have to think, okay, well, who am I going to help now? Mm-hmm. So many times in real estate, a lot of people think that you just show up, the open houses that are there are just given to you and the clients are just given to you, but you have to go and find your own book of business, whether that be social media, whether that may be door knocking, whether that may be sending out flyers, letters, that sort of thing. You literally start from the ground up. So my biggest challenge was that, hey, I was traveling, for essentially 6 years, whether it's stateside, countrywide, you name it. And then I'm expected to come back and just start finding business, right? I can hit up all my old, friends from high school and all of that if they're thinking about buying or their parents are thinking about moving. But the challenge is like, hey, if I haven't heard from this person in 4 to 6 years, then he wants to ask me for my business in real estate.
Yeah, I think I'm like, what?
It's a little bit different. Kind of sounds like a multi-level marketer or something like that, right? So it was very challenging being able to create those relationships from the ground up. And then especially for me, and this probably applies to a lot of other markets as well, is that real estate is extremely competitive. So it's like, okay, yeah. So for me, when I separated, I believe I was 24. So it's like, all right, you're 24 years old, you're hopping into a marketplace where everyone and their mother has a license. Like, how do you stand out from the competition and create something that's different about you to stand out? So to answer your question, it's really the biggest challenge was, how do I get that book of business to actually help people that I've been studying for? So,
okay. So yeah. How do you acquire those clientele? That's the biggest struggle, is trying to find the next fish in the sea, for example. Yeah. So for me, what I did personally was open houses were really big for me. For me, I wasn't really much of a cold caller. I don't like it. You guys probably don't like getting it. So I wasn't too keen on it. I also didn't have a lot of money to start with because I wanted to save all of those expenses for like a rainy day fund. And even if I wanted to send out like social media ads or Facebook ads, flyers, or flyers, or everything like that, I didn't understand that process. Okay. So open houses was the quickest way for me to meet families. And so the way that
Exactly. So the way that it would work is I would, I would find listing agents who already have a listing and say, hey, can I hold your listing open house? Maybe it's a vacant open house, like nobody lives there.
Okay.
Or maybe this listing agent has like 10 plus listings. He or she obviously cannot be at 10 places, right? So it's a win-win to both parties. So then I would go and I would hold an open house. And for you all that don't know what open houses are, those are like essentially, people putting out signs, you go there, also known as like places for free food and all of that. And so, yeah. And so what would happen is that families would walk into the home. They would, they probably found it off of Redfin, Trulia, maybe the realtor sent it to them or followed the signs, that sort of thing. And I would talk to them about the features of the home and see if this was something that they were interested in buying. And usually towards the end of it, if they were, then I would say, great, well, let's talk about writing an offer. And if they weren't, they would usually say, hey, Alex, this home is a little bit actually out of our price point, or this is too small for us. Okay. We don't like the backyard, that sort of thing. Which at that point, I would say, great. Hey, listen here, John, I see that you didn't really like the home. It didn't meet your family's needs. It's obviously not going to be a fit for you. However, I'd love to be a resource for you and show you a few other options. In fact, I know 5 others that I could show you probably tomorrow.
Oh, wow.
What's a good name and email address, that I can best reach you at? Okay. And then from that point, I would be able to have them in my database and follow up with them to see kind of what their real estate objectives were, whether it's a short or long term. Exactly. And then if you think about doing that every single Saturday and Sunday all year long, you're bound to meet a ton of people and then, have transactions come to fruition that way. And that's how I started to build my book of business. Yeah.
What does your typical week look like? I know obviously in real estate, you don't have a set Monday to Friday schedule. And that's one of the most amazing things I love about real estate is you're your own boss. You make your own schedule. You are really the decider you're the captain of your own ship, essentially. You're the one that is going to dictate how much money you make every year. But what did your personal schedule look like? I guess the first year, were you doing open houses every single weekend, every single day? Was Monday to Friday just reserved for marketing? What did it look like for you?
Yeah, so every single day was a little bit different, as you mentioned. Primarily, I scheduled my work week of what's most important. We call it revenue generating activities. So that's like meeting people, negotiating deals, that sort of thing. So Saturday to Sunday would be my open house days, practically for all open houses. And then Monday to Friday would be everything else that would fit in. So in the mornings, usually that's when I would, handle any of my active or pending transactions. So these are people that I'm actively working with, or we're in escrow, or they're an active lease listing or something like that.
What does escrow mean for those that aren't familiar with real estate?
Yeah. So escrow is essentially I call it the shipping and handling of a real estate transaction. Okay. So think about, when you place an order on Amazon, then you have that intermediary period to make sure your packages is all good, everything's all right before you get it. That's what escrow is. So after you accept an offer, or you are the sellers that accept an offer, that sort of thing, you go through an escrow period, which that's where you handle your financing. That's when you handle your home inspections, your appraisals, your title reports, and a ton of other little items that go into making sure that your home that you're buying is exactly what you intended it to be when you first saw it. And so that's what escrow is. Yeah.
Okay.
So of course I want to make sure I start my day with handling all of those questions, so I can update my clients and they can ensure that everything is smooth for the rest of the day. They're not thinking about it as they're trying to navigate their day. And then after that, it's all about finding new business. Like, hey, whether it's cold calling, as much as I don't like doing it, then I'll do it. Following up with people that I met on the past weekend, door knocking, getting flyers ready, sending out letters, that sort of thing. So I call it lead generation. And then for the afternoon to evening time for me, that's where it was, showing homes. So if I found a client that's interested in seeing homes, maybe a homeowner wants to meet to talk about the sale of their home, maybe it's someone that wants to see rental homes, then I would use the afternoon to the evening time to usually accommodate towards that. Unless they want to come in the morning, that sort of thing. Because for the most part, people are working 9 to 5. So that's usually the times that I would allocate for that.
I see. Okay.
Yeah.
What would you say your most beneficial lead generation platform would be? Would it be the open houses? Would it be the social media postings? What has been the most, I guess, valuable asset that you've used that has helped you convert a lot of clientele?
Yeah, so for me to bring, clientele to the team as well as, myself personally has been open houses and social media, but open houses being number one.
Okay.
Because you usually have to think for us is like, what is the level of motivation or intent for someone that's coming to an open house? Like the truth is, we live in California. I live in Southern California where the weather is beautiful everywhere.
Oh yeah.
Nobody's coming to an open house just to have a cookie that I got from, the store. Like, let's be honest here. I'd rather be at the beach, hanging out with everyone or running on the trails or that sort of thing. Right. So when somebody comes to my open house and I know they're there for an intent. And plus for me, I call myself a tryhard, so I'll get suited up. I'm very prepared when I go into open houses. So I'm very excited. It's like an on-the-job interview, so to speak, for me. I'm able to really exactly. I'm ready to put myself out there. Like when I get on the phone or I go on a social media ad, it's so easy for somebody just to say, I'm not interested, boom, and hang up. Mm-hmm. But when I'm there in person, I can see, okay, I see you guys aren't interested in the house. Like, what's going on? Like, how can I help you? And I feel for me being when I started when I'm 24 and now I'm 26 is that people appreciated that I was sort of like a young hustler. So that gave me a little bit more of an edge for an opportunity. And that's why for me, open houses have been great. For others, that may not exactly be their lead generation source, but I'm just talking for myself personally. Okay. And then secondly would be my social media. So that would be really just me documenting the process. I'm not really the type to say, hey, call me. That's just not me, but use it as a sense of value. So to post, articles that may help people with hey, should I really buy or rent right now? Like what's going on? But really document the process. Like, hey, I'm out here working hard. Hey, I just got done showing homes to a family. It's 8 p.m. at night. Just went through a 60-day escrow. It was a lot of challenges. Here we are. To be able to document all of that, people were organically seeing it and then reaching out to me to say, hey, I'm thinking about making a move, whether it's in California or even if they are let's say they're PCSing somewhere else, like to Texas, or I've had a friend PCS to Massachusetts, and they're like, hey, Alex, I need a real estate agent. Can you help me walk me through the process? So whether it's somebody that's in California or, going to another state, I was able to help them through the process because they found me through social media.
I see. Okay. Yeah. Social media nowadays is a game changer. Honestly, you can accomplish so much with social media. There's a lot of businesses that are just running based off of social media and their social media presence. And I see you killing it on Instagram and Facebook with your new videographer shooting all of your content for you. And I think you're definitely pushing a lot of great content out there. And for those that are not already viewing Alex's content, make sure you check him out on Instagram as well. What is it? Homes by Deguzman?
That's correct. Homes by Deguzman. You shoot me a follow.
Yeah, shoot him a follow and make sure you guys check out his content. It's fucking great content. What would you say the average time frame is from you meeting a client to them closing and buying a house or selling a house? What is the average time frame per person for you?
Yeah. So if we're talking about, I'm gonna break it into two categories. You're either gonna have, we'll call it three categories. Number one, you have, I would call it your hot clients, and then your category two would be your warm clients, and then category three would be your cold clients. And so really that question is, it depends on the level of motivation for that specific group, right? How
invested they are into purchasing a house.
Yeah. And where they're at in their life, right? Because everybody has different timelines. Mm-hmm. So for example, we'll start with the first one. Sometimes I'll meet somebody that says, hey, I'm thinking about really buying a home. I've been researching for the past 6 months to a year. Now's the year to go. I'm just interviewing agents and I would really like to get started now. I want to be an escrow. Yeah, exactly. And I would usually consider that somebody that's within 6 months. Okay. So usually the moment from you actively looking, meaning that they say, hey, I want to work with you, Alex. Here's my game plan. Hey, I'm pre-approved. And hey, I want to enter, we're going to make an offer on a home, open escrow and close. That usually takes anywhere between 45 to 90 days.
Okay.
right? That's including like a very active home search, escrow, processing the loans, all of that, yada yada yada. Of course, that may take a little bit longer, or you could go a little bit quicker. It really depends situation to situation.
I see.
So that's one. And then number two would be like your warm clients. So these are people that are saying, hey, I'm thinking about moving a little bit in the middle of the year, anywhere between a 6 to 12 month window. So that's how it works. Yeah, 6 to 12 month window. And then you have somewhat of like your cold clients, somebody that's thinking about moving like a year plus down the road.
Okay.
Right. And so the way that it works is that when you look at the overall, like the overall escrow transaction is, like I said, 45 to 90 days, depending on how quick you can close and a bunch of other little factors. But the point is that the average transaction is just going to vary depending on the level of motivation. And so the goal, exactly. And so the goal is to be able to meet as many people as possible, because then if you have someone that wants to move in, you know, in the next 6 months, then you might meet someone that wants to move in 6 to 12 and someone that wants to move, 12 plus. And then it all overlaps together and it somehow looks like you're, closing everything like every 2 months or every month or every 3 months. It's because they're all overlapping.
Okay.
But to answer your question, it varies depending on the motivation of the person and just where they're at in life, honestly.
No, I definitely agree with that, because like for me personally, like I'm transitioning out of the military in June of 2021, so that gives me exactly 14 months. I am going to move back to California, but I don't really want to move back into my parents' house and stay there for a whole year plus. So right now my main motivation is to find a fourplex or a single family home. And I guess, would you say I'm in the warm clientele, or would you say I'm still cold because I'm still 14 months out? And how many clients have you helped as well with using a VA loan? Because that's something I'm definitely interested in using as a military veteran. That's I think one of the biggest benefits that we have is the VA loan, and taking advantage of that. And that's something I have zero knowledge on and still trying to educate myself on it, but it's something I would use when I go back to the States. Yeah.
So, just to start with that, for you, I would consider you like a warm client, more towards like the end. And I would just say like around 12-month window. And the reason why I say that is because, who knows, you might want to go into escrow for a home before you separate, right? Like 14 months is when you separate, but you might want to say, hey, I want to be in escrow 2 months before I separate, so I close before my date of separation, and so I can move straight into a home.
I see.
Right. So that might be something you want to consider, right? And so I would consider you a warm client, and also because of the fact that you're expressing intent of what you want to do. So there's some sort of interest there. Now, as far as VA loans, I would say that I did quite a bit. I mean, I've done at least over 10. Personally, I'm a real estate agent. I'm not on the loan side, but I'm very familiar and very, very acclimated with it. And I will say the VA loan, initially when I work with veterans, it can seem a little daunting, right? There's all these different eligibilities. You're like, what are closing costs? What's a funding fee? Does 0% down really make full sense? What's the rates like? And there's just a lot of different questions that come up. But to be honest with you, it's very simple as long as you're guided with it. So I could definitely answer any questions for you, whether it's somebody in California to somewhere else. Usually they're the same, with the exception of a few state local laws. Yeah. Okay.
And you mentioned closing costs and funding fees with the VA loan. What is that for those that are not familiar?
Yeah. So I'm going to talk about a little bit about closing costs and funding fees. So funding fees is essentially like when you first get the loan, it's the fee that allows us to keep the VA loans going. It's just an extra fee that the government wants to, put onto the borrower so they can sustain the loan, that program. So like, for example,
in order to have the loan to you.
Yeah, exactly. Right. So like, for example, because it's a government-backed loan. So you would have like FHA, which is Federal Housing Administration loans. And then you also have VA loans, Veteran Affairs loans, right? And so part of the loan is the funding fee. And then of course, depending on what disability rating you have or don't have, then you can get that fee waived and not fee waived.
And if you have a disability, you can get the funding fee waived and not pay that at all?
Yeah, exactly. And the cool part about the funding fee is you can either pay it up front or you can just get it, baked into the loan. So either or.
Okay.
Mhm.
And
Yeah.
what about closing costs? I think?
Yeah. So closing costs, everyone usually gets funding fees and closing costs mixed up.
Mhm.
Okay. Remember when I said earlier, escrow is like the shipping and handling period of
Or you buy
a
that.
real estate transaction. Exactly. So what closing cost is the dollar figures associated with that escrow transaction,
Okay.
right? So when we talked about Amazon, we said, hey, this is the shipping and handling period, but there's also a cost associated with it, right? That is the same thing with escrow. So that may include like the proration of property taxes, your home inspection, your lender fees if applicable, your credit reporting fees, some notary fees, some termite fees, and all the little things that come along with the transaction. That's what your closing costs are.
Okay, so when you're in escrow, those are all the little check on the boxes that have to be done in order for you to buy the house. And when you're closing escrow, the closing costs or the closing fees are what you're paying for, the services that you paid for in order to complete your escrow.
Yeah, that's correct. That's perfectly said. So that's exactly what it is. And so where I find a lot of veterans at first is when we start talking about the idea of closing costs, they're like, wait, I was told that, that can get baked into the loan. Or certain veterans, because I have disabilities, I don't have to pay that closing cost. No, what they were referencing was the funding fee, and people are getting that mixed up.
Yeah.
And because remember, funding fees is a part of the escrow period to get the loan, right? So that falls under closing costs. So you can see how people kind of get that mixed up.
Okay.
Mm-hmm. Yeah, exactly. But you're right. Closing costs, the best way to put it is the costs associated with the services to complete the escrow. Yeah.
Okay. And with veterans that have disabilities, they can get the funding fee waived, but not the closing costs waived. Is that correct?
That's correct. However, now closing costs, right? There's a few ways that you can go about it. Number one, because in a real estate transaction, there's always going to be negotiating, right? Depending on, if it's a really hot home, is there multiple offers, that sort of thing. But there's always negotiating. So the way closing costs can be is a few ways. Number one, you as the borrower can just pay for all the closing costs. Like for me, when I bought my investment property, it was multiple offers. The seller was not going to pay for my closing costs, so I paid the closing costs. Fine,
Okay.
Right? Number two can be you can request the seller. You can say, hey, John, let's say you're the seller. I want you to pay $3,000 towards my closing costs. And then at the end of the escrow, then let's say you have a total of $6,000 as your balance, $3,000 that you accepted to negotiate. I want to go ahead and deduct that, and now your total is $3,000.
But why would the seller pay the closing costs for the buyer though? That's what I'm trying to understand.
Yeah, so it's just a part of negotiating, right? So like for some people, right? And I'll explain it here, I'll just explain it right now. So for some people, what happens is that they would say, hey, John, I want $5,000 off of the house, right? You probably saw that before. $5,000, I want $10,000 off the house. But for some people, they say, hey, I want $3,000 off of the house and $2,000 towards closing costs instead of $5,000, off of the house.
It's a little more
right?
Logical thing, kind of. Instead of saying I want $5,000 off from the house, they say it's part of the closing costs.
Exactly, because it's the same. Exactly, because it's the same net for the seller. But here's the cool part, right? Usually, people want to negotiate price because you have a concern that I don't want to overpay for a house, right? Your agent should run you something called a comparable market analysis and say, hey, is this house really worth $250,000? Is that true? But the truth is that when you go through majority of loan transactions, especially with the VA home transaction, you have something called a VA amendatory clause, which means that when you go through escrow, you're going to have something called an appraisal, which is a third party that's going to come in and say, hey, I want to go ahead and, inspect the home to make sure that whatever this veteran offered to purchase the home for, let's say $250,000, it's worth $250,000.
They're like a third party that checks that hey, this value of this home is the exact value of what they're listing as.
Yeah, of course, it's just their professional opinion of it. However, it gives reassurance to the borrower that they're not overpaying for the home. So a strategy that I use with a lot of my borrowers is I say, hey, what I would like to do, especially if it's like a very if it's a very competitive market, is I'll say, hey, seller, we're going to give you $250,000 for your house, but instead of asking for $8,000 off of the price, what I'd like to do is offer $8,000 towards my client's closing cost. That's what I want, right? As long as your lender allows it. And what happens is then they'll give you that $8,000 if they agree. And then therefore, look, now you don't pay any closing costs because the seller covered the whole balance.
I see.
Yeah.
And how are closing costs, I guess, calculated? Is it based off, okay, so the house is $250,000, so the closing cost is going to be what, 5% of that value, or how does that work exactly?
Yeah, that's a great question. So before I get into that, I wanted to talk a little bit about the last part about closing costs, how to adjust it too. So we talked about either the borrower paying all of it. We talked about either negotiating from the seller, or you could do the three, a little bit of a hybrid of both. So, to be truthful, many times in a seller's market, the seller won't want to cover all of your closing costs. Maybe they'll do a little bit. So what you can actually do is you can have the seller cover a little bit. And because you get really good rates as a VA home buyer, and even for a lot of people, is you can have your lender give you something called credits. And so, credits. So what can happen is that they can adjust your interest rate to bring your interest rate a little bit higher, right? And let's say at that price point, you can adjust your interest rate about a fraction of a point, and then that can increase your payment between $10 and $20 a month. But they can give you, let's just say, like $4,000 towards your closing cost. And then you're like, oh, okay, that makes sense. $10 to $20 isn't that big of a deal. We plan on selling the house in like 5 years anyway after we PCS. Who cares? Right? So that makes sense. So really you can weigh out your options and just know that it isn't one set unilateral thing.
Okay.
So now moving forward, how is closing costs calculated? Well, closing costs they usually say a good rule of thumb is think about it from like 1.5% to 3% of the purchase price. Usually I see it fall between 1 and 1.5% is usually what I see it fall into. But the way that it's calculated is usually it's a percentage of the purchase price. So like for lenders that charge a fee, usually it's a percentage of that purchase price. When you do your proration of taxes, usually it's a proration of that purchase price. Or sometimes when you're shopping around for like insurance premiums, or you're searching for, certain home inspectors or certain services associated with the transaction, those prices may fluctuate. But yeah. And so what happens actually though, is that many times for people that can seem a little daunting. You're like, well, is it 1% or is it 3%? Is it it's a big difference, right? And so I always say just to keep that as a general, rule of thumb, because you as the borrower get to select a lot of those services to make sure that you are aware of what's being paid. But what can happen is that after you go into escrow, and usually after you get pre-approved and the purchase contract is like ratified and all of that, then your lender should be able to get you something called a loan estimate. And a loan estimate, it's an official form that practically says, hey, we have 123 Main Street. This is the type of interest rate we're getting if you decide to lock in your rate. These are going to be all of the fees associated with like escrow, title, and lender fees. And this is how much cash you're going to need to bring to the closing table, right? And then the real estate agent is going to be able to get those fees plus whatever fees that they're calculating on their end, and give you something called a net sheet that says, hey, John Cruz, when we close escrow, this is how much you should be expecting to bring to the closing table.
Okay.
Yeah. Mm-hmm.
That way the buyer is already aware, okay, this is how much I should have available to pay for.
Yeah,
even
at least
a VA loan with 0% down, but you still have to bring something to the table.
Yeah, for closing costs, unless it's been negotiated up front that like, hey, if this loan estimate says it's like $8,000, and then I want to say, hey, this guy's going to already pay me $8,000 for my closing costs, then you can understand that, this is how much I should be bringing to the closing table. But it should never be a surprise. Like you show up, oh my gosh, I didn't know I was supposed to bring $10,000 to the closing table.
Yeah, because, like you don't want to be caught off guard. You shouldn't be caught off.
Yeah, you shouldn't. And a lot of those disclosures comes within the first week of your real estate transaction. So you shouldn't, you should know it. unless you were just clicking through all your disclosures and not reading anything that they're sending to you.
Kind of like
I highly advise.
CBTs where you just click through.
Yeah, CBTs, click through it. That's fine. Click through the CBTs all day. I don't care about that. But when you're buying a home, make sure you actually just take the time to read it. If you have any questions, call your lender or real estate agent. They better be able to. Yeah.
So if we were to let's hypothetically speaking, if I were to purchase a house and you were my realtor, and I had found a fourplex in Southern California, let's say Newport Beach. I've been looking on Zillow, and a lot of the houses out there are like $1 million is the starting cost. I'm like, oh my god, it's like an arm and a leg. What would the process look like from start to finish? Would we would look into Zillow first, find the property that I would be interested in, or you would already know the properties that might be suited for me. We would then view the properties and do a walkthrough, and if I like the property, what would be the next step after that? Yeah,
so we're gonna put you. Let's pretend you're in the category of your timeline's a little bit closer, and you're part of I call it the hot client. So you're ready to make a move between 1 and 6 months. Let's say you're in that category now. The first thing we would do is we want to make sure that you're pre-approved, right, or pre-qualified.
Pre-approved? You mean for a loan?
Yeah, exactly, for a loan, right? Because think about it like when you are going shopping for a car. Right, we want to make sure that how much am I pre-approved for? What would my monthly payments be? And then you go car shopping, to see what car best meets your needs and your payment exactly.
Because you know what your cap is, how much you're going to get loaned, and how much your monthly payment's going to be.
Exactly, and it allows you to be a little bit more systematic, right? Because what we don't want is for you to spend hours and days and stressing and coming out and using your time to come out and look at homes, but then really find out that this may not be a part of the objectives that I'm looking for. So number one is to get pre-qualified and pre-approved, and of course, in that stage, what I always recommend to everybody is two things. Number one is the expertise of the lender and what they can achieve. So, making sure that they can be able to actually guide you through the process and teach you about it, because understand, this isn't like getting a car. You can't just drive it off the lot and you're done. This is going to be the largest wealth building asset of your life, and you want to make sure that you understand what's going on. So someone that's consultative. And then number two is, of course, the rates. So be sure to shop around. Make sure that you're not getting a lender that's giving you extra fees that really isn't necessary.
Now, when you say lender, so when I apply for a VA loan, I'm not getting the actual loan from the VA. I'm getting it from third parties. Is that?
Yes, that's correct. So many times people think that the VA is issuing the loan. The VA does not give out mortgage loans. What they do is they insure the mortgage loans. Okay.
Okay.
In the event that the borrower defaults, right, is what it is. So if you go to, I don't know, I'm just going to say a few, let's say you go to better.com or you go to Veterans United, Navy Federal, USAA, they all have, certain loan programs that may fit your needs. And that's what you want to, you focus on, is those are the lenders that gives you the loan, and the VA just insures it. So do not get those two mixed up. Yeah.
Okay, so that'd be the first step, is to get pre-approved. Then we'd shop around for houses. Yeah.
So then the next question I would ask you, right? So now we talked about loan amount. We said, okay, loan amount is usually where you're at. But really the truth is I say, okay, what is your monthly payment, right? How much do you want to spend a month? Including everything, your taxes, your insurance, your principal, your interest, your HOA fees, if applicable, and everything. Usually that's what happens, because a $1 million loan amount may be very different than the monthly payment you are paying in that area. It's not always the same because there's different fees in every area. Oh. So I would also ask you, what is your monthly cost for housing that you want to allocate that towards? And then from that point, we would say, okay, I always tell my clients, what is your objectives, right? What's your short-term, your mid-term, and your long-term goals? Are you buying this multi-unit because you just want to start building wealth? Do you want to move into the single family home because you want to have children in the next year and you aspire for he or she to go to that elementary school and you be closer to family? Do you want to buy a fixer-upper and then you want to flip it and then move it in 2 years? What's your objective? And everybody has different objectives, and that's why we'll start with that. But for the sake of this, let's say, let's go with the multi-unit example, and you want to buy it because you want to start building cash flow and building wealth through real estate, that sort of thing, right? And rent out the other units. So the first thing I would ask, what we would find out is, okay, here's your loan amount. what's the maximum you want to pay in monthly payments, right? Like bottom line, what's your maximum? Maybe a small variance if it was the perfect deal, right? But you may have to go up or down. Like, what does that number look like to you? And then I would say, okay, based off of the following, here are some options for us to consider. Because then what we want to figure out is, let's say we're going into a fourplex in Santa Ana, or a fourplex in Corona, or a fourplex in Long Beach. We want to see what is the rental rates going to be like for all of those specific units, because the rental rates are going to be very different from city to city and neighborhood to neighborhood. So then we want to figure out, okay, if I rented out all of these units and my monthly payment maximum is this, does it make sense, right? Because sometimes if your monthly payments is far greater than your cash flow that you're bringing in, then it may not make sense.
It's essentially losing money because
it's essentially moving.
Tenants aren't paying off the mortgage for you.
Yeah, exactly.
Pocket, okay.
Yeah, like exactly, and then you're putting out of pocket money, back towards covering the housing expense, when the intention of getting the multi-unit was to have the tenants get cash flow and then also cover that. And that varies, area to area. Here in California, sometimes that's a little bit more trickier to achieve versus a lot of the other states like Texas, Ohio, Georgia, those places. It's much easier to achieve that. Florida, but California, you have to be a little bit more tricky and calculated. So that's cash flow standpoint. Then I would want to figure out, okay, out of these areas, where are we going to see room for appreciation in a 5-year window, right? Because real estate should always be a long-term investment. I wouldn't recommend selling it off for 2 years unless it's a very niche type of thing like flipping or new construction, that sort of thing. But we want to figure out, okay, what is the projected area that's going to show us appreciation? Is it Long Beach? Is it Corona? Is it Newport? Is it Santa Ana? Like
how do you determine that? How do you determine which area is going to have the most appreciation within X amount of years? Like, are there certain factors you look at?
Yeah, so there is. And so, of course, as a disclaimer, like I don't have a crystal ball, right? I have investment properties myself, and I can't say that it's going to go up forever. Maybe there might be a correction. I don't know, right? But the factors that I can control are these 3 primary pillars that I believe shows that I am going to be able to get that return. So I always call it the population, job growth, developments, and I guess it's 4. So job growth, population, developments, and then the socio/economic area. So
demographics then. Oh.
Yeah. So I think about like these 4 pillars. So because as long as you have those 4 pillars, you're going to be in good shape. And I'll explain with my personal example that I followed this by and how I believe that's true. So number 1, population, of course, right? We know that in real estate and in life, everything comes to a supply and demand. Of course, if there's a limited supply, but there's a demand for an area, then you're going to see prices go up, right? So let's think about a few cities here. Population, like Los Angeles, New York City, San Francisco, right? What do you notice there? There's a ton of people, there's a ton of traffic, right? But what do you also notice there? It's so damn expensive to live there.
Yep.
Well, why? Because there's so many people and the demand is like, it's there, right? And then job growth, right? Like, of course, why are people there? Because of jobs. They're there for jobs. That's case in point. They're there for jobs. So job growth. And then development. So that can be like, are we revitalizing the city? Like, is there going to be a new shopping center? Is there going to be a new school around the subject property that you're thinking about? Yeah. Like, is there going to be a new railroad station that's really going to like add value everywhere? That sort of thing. And that's going to be more through like local channels. And then lastly, socioeconomic factors. So like, have we consistently been seeing job growth here? What type of sectors are moving to this specific area? Are we seeing a growth in a tech space in this area? Like all those little things, right? What's the vacancy rate of this area? Meaning like, if it's at a 90% vacancy, a 10% vacancy rate, that means that 90% of the year, it's being leased out, and 10% is not being leased out, right? And that's just as a macro approach. And those are just to name a few. So when you combine all four of these, then you have a pretty good understanding, is this a profitable area in the future? And the cool part is you don't need to be like a crazy analyst to be able to find this information. You can actually just go on Google, search up like US Census, or census data, or any of these public, websites that's certified, like a .org website that talks about these cities. And then you can say, okay, the growth is here, right? The growth is here. It says that in Irvine, we've been seeing, about a 20% increase in population since, the past 3 years. And we're projected to see another 30% because of, there's an increase in tech space. It's getting more expensive in LA. People want to come down here for the schools, yada, yada, yada. That's why we see all of those. Well, what do you notice? In the past 5 years, Irvine values have gone up like 30%. So when you think about that as it relates to those pillars and then putting it into a real-time situation, you're good. So a more of a personal example for me was, I would say in 2015, I purchased an investment property in Las Vegas, a condo, a foreclosure for about $87,000 is what I purchased.
What is a foreclosure?
Yeah, a foreclosure is essentially a property where a homeowner failed to, pay their mortgage after a certain amount of time. They couldn't pay it, and the bank seized it, and then they're selling it back in the market as a foreclosure.
I see. So it's like, if you want to relate it to cars, it's if someone's not paying their car rent or car loan, and the repo man comes and takes the car, it's the same thing. It's a foreclosure.
Yeah, exactly. So what happens then is, so I purchased that home because I said, you know what, I want to start building wealth, renting it out, that sort of thing. And what happened was, specifically for that transaction, I was in a multi-offer situation, back to closing costs. I didn't want to ask for anything. I paid the full list price and paid my closing costs because I wanted to win the offer. Great, I got the home. And before I researched that property, I was sure to research the area, right? Because it was like borderline, like a not so good area, right? Uh-huh. So what I wanted to do was say, okay, let's not be romantic on the unit itself, but focus more objectively on the area. Yeah. So then I said, okay, Vegas has an increasing population due to affordability index here in California. We're seeing that a lot of people are moving to Vegas from California and Arizona. In addition to that, that specific area has grown in population 30% every single year. Job growth is going up. There's more developments coming around. And so I said, it's a good investment. The vacancy rates are very, very low. We're good. And so I got the property, rented it out, all of that, got cash flow, tenants paying down the equity for me. Great. To this date, I just reassessed it the other day, and now it's like 160, which is good. So, I mean, if you think about it, like if I acquired it for 87 5 years ago, and then now we're at double essentially.
This is the appreciation value. This is worth now. Okay.
Exactly. So when you think about it, we're practically doubled my investment, which is like just the power of time. Mm-hmm. But if you think about those pillars, okay, you're good. Like you're there. It makes sense. So that's how you would be able to assess, what types of areas and properties for you to consider, right? Because, also I just want to say out there too, not all agents are cut from the same cloth. And what I don't want, whether it's malicious intent or whether it's just, a intention of not being really thought out with your objectives, it may not make sense for you. For example, I had a veteran home buyer that wanted to use $1 million loan to get a single family residence here in Irvine. Then after we ran the rental cash flow, we see that his monthly payments would be about, $4,500, but the rents would only rent for about $4,000 a month. And then for us, we were like, yeah, so he would be like negative 500 if he was to lease it out. What's the point? Let's not do this. And so that's why that's important to go ahead and, consider that. And of course he could have put down a down payment and then the cash flow would have made sense, but his intention was to use 0%, finance the whole thing and rent it out. So it doesn't always make sense in some areas. So now after understanding, okay, this is what our financing looks like, this is what our options look like, then I would say, all right, let's go ahead and let's schedule a tour to see these properties, right? And so now we would go ahead and start home shopping. This is where we've already assessed, like, these are the areas you want to be in. These are the types of homes you're looking for. These are the types of costs I should be expecting if we close. let's go ahead and start looking. So we would start searching. And after that, we would find our homes, right? Let's say we found our home now. We found our home, great. Then we would create an offer, residential purchase agreement, which highlights our terms, our purchase price, and everything associated with the escrow. And we would submit it to the seller. At that point, they would review it. They would, see if they want to counter us, practically the negotiations. And then after we come to terms, what would happen is that they would go into escrow. And then that's when we would go through all of the escrow pieces, being like, like getting your loan ready, doing our disclosures, going through our home inspections, appraisal, and every little thing that you may possibly, be thinking about would go through escrow. And then at the end, we would close. Yep. So that's practically everything broken up into a 5-step process. Yeah.
It sounds very simplified when you break it down to those little steps, and it sounds a lot more simpler than what the average home buyer is expecting. So it doesn't sound as daunting when you break it down like that.
Yeah.
And when you purchased your property in Las Vegas, did you end up using the VA loan or did you use an FHA loan? And what is the difference between a VA loan and FHA loan, if you don't mind explaining that? Yeah.
So, there's 4 types of loans out there. Of course, there's 4 types of main ones that consumers use. And there's some other private money, hard money, but I won't really get into that for this. But for 4, you have your conventional loans, you have your FHA loans, your VA, and then your USDA loans. So VAs for veterans, FHAs, I call it the more affordable home loan because you have lower down payments, they're not as strict with FICO scores, all of that. You have your conventional loans, which is like traditional bank loans. And then you have your USDA loans, which are like another government-backed loan that's for rural areas. Okay. So to buy my investment property, I went with a conventional loan, which was investment property, so required 20% down payment. So I put 20% down payment, and then you're good. Because for your VA loan, it needs to be originally a client for you to use it as your primary residence.
You have to live in the property. Okay.
Exactly. So for me, living in California, it doesn't make sense for me to have a primary residence in Vegas. So yeah, so I used a conventional investment loan. Yeah.
Oh, cool. Well, man, thank you for all the information you shared with me and everyone else viewing this video. It's been very informative for me myself. I learned a lot just talking to you, and I'm sure a lot of the other viewers that are going to watch this video are going to learn plenty just from this video in itself. I'd just like to wrap up everything we talked about, just the VA loan, real estate, making sure your intentions are solid on what you want to purchase and why you want to purchase a home, and making sure those steps are all in place, and having a good realtor that'll walk you through the steps, and a good lender too. So all those little things that we discussed, I think that's going to be very beneficial for me and to other people watching this video down the road, so they don't miss out on those important steps that they're going to need when they purchase their first home. But yeah, man, thank you again for sharing your story with us. Thank you for sharing all of your feedback and your experiences on real estate. And I'm sure a lot of people are going to benefit from this video. And again, everyone that is watching this video, make sure you head over to Instagram and follow Alex Deguzman. His handle is Homes by Deguzman. And also check out my YouTube channel. It's John Cruz 1776. If you go on my YouTube channel, I talk all about, like I said, finances, real estate, investing, how to separate from the military successfully and have a job or a position lined up, and the different programs available for military veterans out there. But to wrap up this conversation, man, did you have anything else that you wanted to share with everyone else, and any last remarks or tips that you can give to a new home buyer or veteran that is looking to purchase a home in the next 6 months?
Yeah, so I guess the last tip that I would like just to give to everybody, whether you're separating from the military or you're looking to buy a home, is just have a plan, be intentful about it, and then reverse engineer that, and making sure that you're just aligning yourself with the right people. But really, to the home buyers and all of that, choose your lenders and your real estate agents very carefully. And the reason being is because these are going to be, I call it the people that are going to be guiding you through the process to your home purchase. And make sure that if you need someone that's going to be consultative, find that. It's not always dialed in the fees. It's making sure that the experience is there and you're learning as a whole. I think of it as the very difference of having a very savvy CPA and going to TurboTax. You know, one might save you more money than the other, right? Depending on, of course, like how your life is set up. And understand that it's never too early to start planning. So don't just wake up out of bed and say, I want to go buy a house. Start planning now. Start building that plan. And really make sure that you're understanding the process before you go into it, because it can be a little daunting, and I just want to make sure that you're all prepared. So,
cool.
Yeah.
Thank you, Alex. Appreciate all of your time that you have with us and for sharing all that information with us. And I'm sure we'll set up another video series in the future going over real estate, investing, stocks, all the investment strategies that we can share with everyone else. But for now, again, thank you for your time. And if anyone else has any further questions, make sure you comment below and make sure you like this video too to boost this video's algorithm on YouTube and show us some love.